Hey traders, welcome to the US equity update. So obviously we had quite a big sell-off last week, followed by a pretty decent bounce heading in towards Friday's session, the end of the week. And now it's just a matter of looking at where to from here. So as you can see, we've had a structure that can be a couple of things. Firstly, we have this little running flat with a final wave up, potentially a wave failure, and then a fall down to the downside. Or we can start to look at this as an expanding flat. The problem I have with the expanding flat theory is that when we look at the numbers, we go right down towards that 2414 and we bounce off of that. So we're looking at a very expanded flat. If it is expanded, which is obviously a sign of the kind of bearishness that we've been seeing in the market around inflation and the tech region. In order to really trade any further, we would need to really look at the structure on the lower time frames and find something that resembles something tradable. If we go to the hourlies, you can see how we had a really strong bounce off these lows with no real corrective structures forming. So in order for us to really look for a long in the S&P, we would need to see at the very least a decent looking structure which resembles further upside to come, because there's always the possibility that this little move to the upside was just the first of a corrective structure to the downside. So I think this week is going to be a game of patience, looking at seeing where we come out of this little structure, because as you can see, we have impulse down, impulse up. That doesn't really give us much in terms of where to from here. So because of that extended nature, we really need to be conservative in terms of finding an entry to the upside and to the downside, because both of these resemble an either or scenario. So we just need to be really patient with the markets this week and wait for the right opportunity in terms of trades. And that's just from the kind of S&P point of view. I'm still kind of bearish longer term when we look at some of the other equities. You guys know I'm bearish this market still. When we look at something like the Nasdaq has a little bit of a formation that resembles a bit of a running flat here, which may start to eke out as a little bit of a move to the downside. So in order for us again to have any confidence in an upside, we need to see lower time frame corrective structures that resemble further upside down the line. So right now we're in kind of a 50-50 place in the structure. If we move on to the Dow Jones, obviously the Dow Jones had a massive sell-off without much of a structure around it. We had this little fairly clean and clear triangle, and then a really strong rally off of that, and then a really, really big dip from there. This is why I'm more inclined to think what we're seeing now is a little bit of a counter rally that is going to fade, and we're going to see further downside. So we're going to look for that same little corrective pattern before we can really in earnest get into that downside structure, trading it to the downside. So watch the Dow Jones as a really interesting trade because of the size of that impulse off the highs. Really resembles pretty strong downside potentially to come following a decent corrective structure moving forward. Moving on to the Russell. The Russell's kind of in that same boat. As you know, I've been pretty bearish the Russell. If we zoom out, you can see a fairly decent type of head and shoulder structure that's formed here, bouncing off the potential neckline. And then when we zoom in for a closer look, you can see there's another potential running flat structure to the downside, which is obviously indicative of potential further downside down the line. But higher timeframes, again, all of these charts on a higher timeframe point of view are very, very overcooked and do look like they're ready to pull back, at least in the short to medium term, maybe even potentially a longer term structure forming here for downside that we need to look at. So again, I remain bearish. I remain very, very conservative in my equity longs, the ones that I do have, which are very, very few at the moment. And when I do look at those longs, it's more in line with the defensive stocks. When we look at the 8-hour chart, you can see Facebook. We had what looked like a nice corrective structure. Still looking at this as a bit of a triangle given what we've seen. I don't really see much of a B wave because this A wave to me is too complex to call this an A wave to the downside and then all of this choppiness back up a B wave and then later a C wave. But regardless of how you look at it, it still looks to me like downside because it's either part of a downside correction, which means at the very least we should see this move kind of along the same lines as that A wave, which would actually be to here, but just for interest, for clarity's sake, I'm going to show you at least we're going to see a move down towards 268 from these regions. As you can see pre-market, we're down already. So again, that bearish nature is still there in some of the big tech stocks like Facebook. Apple, I still think has a move towards, at the very least, 101, potentially even bigger. As you guys know, I drew this little arrow in back in, when was it? Kind of early 2021, early or late January 2021, and I still see more downside there. We can look at something like Amazon, which is showing further downside too, maybe a little bit of choppiness, or the alternation is going to come in the form of an expanded flat, maybe heading to kind of 1.618 territory, which would be down here at around about 2463, which is another big drop to come. Obviously, if yields continue to rise in the way they will, in the way they have, that's going to be very negative for tech stocks. And I do see a scenario where that does occur. In terms of the highs here, we can see that the high back in September was 351,290, and the high here was 352.26, 351,345. So the high is actually the C wave, which gives it a running flat structure, but only if that sell-off kind of fades away in this region. Then we can start to look for longs there. But if this turns into an expanding flat, you may even see a wave failure down the line, and then it actually becomes a neck and shoulders retest before further downside comes. So be watching that closely. But again, short term, still pretty bearish. When we look at Microsoft, there's no real structure in Microsoft in terms of where we headed. All we know is we really overbought on these levels in the higher time frame. So we can expect a further sell-off there, especially if the rest of tech sells off. Netflix continues to have that bearish look to it. It's been a really, really slow chop from following this big dip. So we can look at further moves down the line. My only concern here is this actually becomes more of an expanding triangle, which means we could get a decent rally as an E wave, which would obviously close this gap, and then we get that A, B, C, D, E, and then moves to the downside. But generally speaking, I still have a bearish look to it. And when we look at a classic charting point of view, that little scenario has a nice little kind of head and shoulders structure to it as well. Alphabet, Google, kind of the same as Microsoft in terms of structure, not much, but you can just see on these 8-hour time frame and the lower time frames, you just see how overcooked we are at these levels. So maybe a put option strategy on Microsoft and Google may pay off in the longer term or medium to short term, even just because of the structure being so overbought. We're already in a condition where we should start to see this pull back at the very least in a corrective manner, maybe even a longer term deeper correction. AMD kind of continues to follow our blueprint, potentially a little bit of a bounce here to give us that little E-wave structure we were looking for. And again, that head and shoulders very, very prominent. And we're seeing that throughout a lot of these tech-based stocks. So we can expect a short-term bounce potentially, and followed by a nice little sell-off, which obviously you're going to be looking for that sell in this area if we do get a bounce from these levels. Bank of America, obviously, it's just a patience game. A lot of the financials, longer term, very, very bearish, but you have to really be patient for that short because the financials are really in a place where they could still chop higher. Obviously, with yields rising, that can help the banks. But longer term, speaking the longer term, we definitely have a bearish look to that. So it's just about being patient. Like we said, a lot of us just waiting for the sell-off and a corrective structure to look for the short. Alibaba continues to look bearish. We had that little bit of a sell-off in the lower time frame structures, impulse, expanding triangle, impulse to the downside. That structure is now complete because we went to go break these lows. So now we're in a little bit of a mixed bag where is this all part of a higher time frame running flat where we could start to see Alibaba take off to the upside? Or can we look at this lower time frame structure as a little bit of an ABC, which would lead obviously then to another big sell-off because the next move would have to match that little previous impulse. So if the rest of the market is running, I don't see how to the downside. I don't see how Alibaba is going to be running on its own to the upside. And obviously on the lower time frame, that kind of fits the bigger picture as well, because it just becomes a bit more of an expanding flat. If we look at the structure and where we can get to on the downside, we still have some room to move to go into extended levels and maybe beyond that. So I'm more inclined to look at the bearish picture, but obviously potentially a little bit of a short-term bounce here is on the cards as a possibility. Berkshire Hathaway, again, kind of in the same lines as the financials. You can expect a big sell-off down the line, but waiting patiently for indications of that sell-off. We can't really look at anything other than that at the moment. Beyond Meat broke out of our little triangle and potentially has a running flat structure to it as well. So again, another one that looks like there's potentially a short-term bounce, which kind of lines up with the buy the dip mentality the market has had for the last few years. Maybe they start to buy the dip and then that dip just kind of fades into nothingness. And then we see that really big sell-off again. So Beyond Meat is another nice one, which could see some good downside following a decent bounce in the short term. Citigroup financials, again, same blueprint, not much there, just waiting patiently for that. Camco, another one that's been kind of difficult to trade, but they haven't really given us any longer term structures that resemble big upside. So in terms of bigger upside, as you can see, this 8-hour structure is already extended because we had this little impulse. We had what I assume to be an expanding triangle, and then the next impulse is right at the 1.618 region. So in order for us to have any decent opportunity to get long, if we are kind of wanting to get long into the resource sector, we need to see a correction that kind of resembles that kind of length. So that's going to be here for a while. Otherwise, I'm still bearish looking at this as a more sell-off point of view, where we're still seeing this higher time frame structure as an expanding flat as well, which kind of lines up with silver and basically the rest of the resources, where I'm still have a bearish outlook on that. And without a decent setup for longs, I remain in the bearish camp, at least for now. Chipotle still continues to sell off. Nothing really in terms of a trade until we can get a decent corrective structure. And right now there's nothing there. It's just a kind of, we have a decent correction here in terms of a running flat. We have a nice move off those lows, but that faded pretty quickly. And I don't see a structure where we can look at this as something more in terms of a bigger correction that is completing for further upside. I don't see a structure that kind of holds that weight or that mentality. So I'm more inclined to wait for a corrective structure and then look for that short. And a lot of, like I said, I'm very bearish across the board. I'm struggling to find any decent longs or long hedges to take that kind of outlook out of play. DraftKings, another one that played out pretty much in line with exactly what we were looking for, but we're now at the end of that lower time frame structure, and we just need to see where to from here. Obviously, being a speculative stock, this just continued to sell off, and we may need to just wait for a corrective structure on the lower time frame, something along those lines, before we can get into any shorts or any additional shorts without conviction. But right now, I'd like to hang on to my shorts because I do believe this is going to sell off pretty strongly. And then again, when we look at it, we just broke the neckline of a kind of topping pattern. I wouldn't call it head and shoulders because the head is actually in this region. Maybe what we saw here was a left shoulder ahead. And we're going to get a little bounce as a right shoulder, kind of along the same lines as that short-term bounce, and then another big sell-off. So that kind of lines up with a kind of bigger correction in this region, maybe a running flat that becomes a break and retest of the neckline before further downside persists. So I'll be waiting for that as well. Like I said, a lot of patience in the market this week in the short term. Same with Penn National, same outlook, and pretty much the same structure. And again, we have this kind of head and shoulders type look to it. That's worth watching. Walt Disney, nice big gap to the close, or gap on Friday, and we still have that downside mentality here. When we look at the structure on the lower time frame, there's potentially a little bit of a running flat forming there. As you can see, we had a decent little A wave to the upside, a nice choppy B wave to the downside, and then you can expect potentially another bounce here, which would give us a little bit of a expanding or running flat, maybe go test this little trend line that may have formed in this region. Maybe a bit of an ABCDE or running expanding triangle is another option, but basically any rallies that occur here, you would want to sell. EA Sports, another one. Structure-wise, kind of difficult, but when you look at the classic charting point of view, it's got a pretty precise head and shoulders structure to it as well. And again, we were looking for this to develop into a longer-term corrective structure for downside. So we'll have to see how that forms down the line. But again, nothing really tradable, just a matter of patience. If you want to look at a lower time frame trade, you maybe want to look at this little impulse off the highs as a potential starting point, and then watch this little corrective move to develop, continue to chop down to the lows, and then give you another impulse to the upside. And that gives you a little bit of an ABC running flat for potential little downside move down the line. But again, it's a matter of patience and just waiting for the market to develop further. Expedia, still pretty bearish here. Wasn't expecting this little bounce that we saw towards the end of the week. But again, the structure still looks pretty bearish to me. You may start to look at this as a bit of an expanding triangle, something along those lines, just a more complex expanding triangle. Maybe that was your A, B, C, D, E. And now you're going to see some downside hitting into today's session. That's obviously a possibility. This is a lower time frame stuff, but higher time frame, I still really like to move down towards 100. So we'll be watching closely to see some downside moves and some short trades there. Ford still remains in a kind of lower time frame correction. It has another expanding triangle look to it. When you look at these waves, you have this A, B, C, D, E, very impulsive looking waves, nothing very corrective, which gives me the understanding that what we're looking at here is a bit of an expanding triangle, which may start to sell off in today's session. So that's another one to watch. And that's a kind of your first lower time frame corrective structure following this bigger running flat. Also the possibility you could amalgamate these two patterns into one big A, B, C, D, and then a choppy E wave. So that's a possibility as well, which needs to be taken into account. But either way, I'm just looking at bearish structures here. And then again, you can just see a little bit of a head and shoulders top that's formed here, which is definitely indicative of further downside. Gold miners, GDX, popping higher once again. Gold is kind of on the brink now. We really need to start to see some downside in gold. But again, there's still potentially a little bit like a $30 upside. As you can see, if this goes to an expanding flat level, it doesn't really change our downside look. I'm still holding firm on my gold shorts. I really believe we're going to see downsides in gold, especially if yields continue to rise, because that makes gold unattractive as an investment. You'll see flows coming out of gold into more higher yield, because gold is a zero yield asset. You'll look for things that have take advantage of that yield, such as treasuries, so that money would come out of gold and into treasuries. So obviously a little bit of upside here is still on the cards, still a potential. Obviously this little region here back at the highs is of interest, because that's always going to be an interesting level for a potential sell-off, and then we can start to look for those shorts. But I'm still, again, got this head and shoulders type high or head and shoulders top. Maybe you have to move the neckline a little bit. And maybe what we're looking at here is more of the right shoulder rather than that little smaller section that we saw there. So I'll be looking at that as a potential right shoulder for downside. But again, it doesn't change the story that I still think downside in gold is a very high possibility at the moment. Goldman Sachs, potentially the start of our little move on the lower time frames, worth looking at. But this will obviously take some time to develop, and we'll need to watch this closely over the next few days and weeks to develop. But it's got that same finances setup that we're looking for. It's just going to be a while to play out. Morgan Stanley, same thing. Nothing really there for now. We just need to watch this develop over the week, maybe the next few weeks, to give us that short down the line, but still very bearish Morgan Stanley. It's just a matter of patience there. The Biotech ETF starting to bounce off those lows, which is exactly in line with what we were looking for, giving us that complex structure. So another one that looks like a short-term bounce that could fade to the downside. this is potentially big moves following this corrective structure, because as you know, complex flat patterns obviously build up a lot of inertia, which could be released in a big downside move, and the higher time frames are always confirming that, or still confirming that. IBM, still like to see this rally. Maybe we see a strong rally this week in line with the rest of the market up towards our 160 zone, where we would look for that sell-off. Not too much more to go. So once you see IBM, this 160 region, it lines up very well with our higher time frame structure short, and a potentially really big short at that, because when you look at the structure on the weeklies, it is a very nice structure. So you can expect a lot of downside to come there. And that 160 zone is a really good sell-off zone. Got alternation, got a nice complex B wave in the middle. Everything's lined up for a great sell at this 160 level. I'm just hoping it gets up there in the first place, because as you know, we've done enough already to start to see a fade to the downside. So you can see that we've crossed the 0.786, but hopefully we get that short-term bounce up towards this 156 level. Ideally break these highs at 159. We'll see a lot of selling pressure up here, and then we can see that acceleration to the downside. Intel continues to sell off in line with our kind of structure that we had on the lower time frames, and again that head and shoulders top type structure. So we should see this continue to move to the downside. Obviously, a short-term bounce here is potentially on the cards. It just doesn't form part of the structure that we're seeing now. So you'd have to watch for that as a potential entry into the short trade if you're not in already. Johnson & Johnson, still kind of watching this develop. There's not much in terms of structure going into the lower time frames. You can see that we're still looking at this as a potential ABC corrective structure. So I'm more interested in selling above the highs, because you really want to break these highs to confirm that ABC pattern. You can sell that in the short term and then buy it down here at this 150 region as a nice running flat. So just the structure is going to give you that confidence to buy or sell and then buy, because we have that ABC correction, that running flat structure. We can look for the longs following that. So some up and down trading potential in Johnson & Johnson. JP Morgan, again, financials a little bit less developed because we did go break the highs, so we can't really use this impulse as part of the structure to the downside. Now we have to wait and see and wait for another short-term impulse to the downside and a correction to confirm longer-term downside there. Live Nation, saw quite a big bounce there, but it's actually just in line with a little bit of a running flat structure, because it's still forming part of this running flat. Kind of a fake out to the downside, which looked to resemble a continuation to the downside, but maybe just a more complex C wave, part of this ABC running flat that we're seeing here. A little bit frustrating if you win that trade, but this does happen, and you just have to account for it as best you can. I still think a short is on the cards here. MicroStrategy continues to sell off, and should continue to sell off down the line. As you can see, ABCDE has completed, and now we're seeing further downside here. Obviously, short-term bounces are on the cards on the lower time frames, but in terms of the higher time frame structures, I still see pretty much a big sell-off to come down the line. In terms of downside targets, we do have quite a big downside target on this one, because of the size of this big impulse here and the size of the correction. The correction is really nice and big in terms of that impulse. Lots of, like I said, lots of inertia. Obviously, we're not going to go into negative 79, but you can see how a move kind of sub 100 is definitely on the cards. And when you look at the nature of MicroStrategy on the longer time frames, you can see how it follows this same kind of structure, where we have these really big impulses to the upside, and then really big crashes back down to this kind of $10 floor that the structure has. So definitely in line with the potential move that is on the cards, especially if Bitcoin continues to look bearish. It's got a lot of bearish momentum at the moment, which is a little bit worrying for the crypto market. Nvidia continues to sell off, and kind of in line with the Nasdaq, has got a little bit of a structure forming here of a potential running flat to the downside, maybe a little bit more upside, but then a move to the downside to follow that. Definitely a potential that's on the cards moving forward. So we'll be watching potential entry there as a short trade. Pfizer continues to chop around. Given the structure on the higher time frame, I expect further upside following this choppiness. But this choppiness, I don't think, is over. You'll probably see a short-term bounce, and then an E wave to form, which maybe be an extended E wave, or at least a decent downside before seeing further upside. But still looking at this as an A, B, C, D, E, given the kind of nature of the waves that we've seen in this stock. So we'll be watching for potential opportunities around that. Riot, kind of the same line as MicroStrategy, that whole blockchain crypto space, really dangerous levels for further sells down the line. I think this has got a downside target of around about $3. So sitting at 25 where it is now, and off the highs that we had at 80, we remain bearish in this and should see further downside. Obviously, the juice of this has been kind of taken out, but when you look at the structure, you can see there's at least a little bit more of a move down towards 14 that's potentially on the cards. But this was a trade that we were looking at way back, and we should have seen some good sells from this 45 region at the very least. So you should be some good upside if you did take that trade. Ross Stores, again, kind of still has this rising wedge structure with a retest. So be watching this pretty closely. Perhaps we start to see this give us a little bit of development in terms of structure on the lower time frames, maybe form something along those lines. Is obviously a little bit of a potential head and shoulders top here on the higher time frames, just giving you its right shoulder at the moment, and then a break and retest of that neckline would fall right in line with the structures that we're looking for here. So, and then higher time frames, we still remain pretty bearish that, and should see a very strong sell-off on the higher time frames too. So it's all kind of lining up. It's just a matter of being patient at this point. But basically, selling anything at these lows at 123 is a fairly high conviction trade for us to the downside. Spirit Airlines, starting to see a little bit of development in terms of the structure. What we thought was a triangle to the upside, to the downside, or potentially the upside. As you guys know, we were looking at a hedge to trade a break to either side, is now starting to look a lot like a running flat for downside. So you can see how all this complexity that we saw in the middle section of the structure is actually just forming part of a potential B wave that we were looking at. So I'll probably look at it as a little bit of a kind of triangle central structure, impulse down, A, B, C, D, E, impulse down. Now we're getting the C wave to the upside, and then we can see a big sell-off following that. And then again, you have this kind of neck and shoulders, head and shoulders top structure to it. Starbucks continues to play out pretty nicely in terms of our blueprint that we were looking for. So anything in terms of a short-term rally, which a lot of these charts are showing, is something you would want to sell into and look for shorts from this 115 region. The structure looks pretty good to me in terms of moves to the downside. Seagate, surprising rally that we saw in Seagate. I was really expecting further downside here. If you were sharp on your stop loss management, you could have moved to break even fairly early on, but more than likely you took a loss here. Like I said, which happens, you just get these little fake outs, but when we zoom out to the higher time frames, nothing really changed in terms of structure. You can see this ABC structure that's formed is one of the cleaner structures we have on the higher time frames, which is very much in line for a big sell-off. So I would definitely take another hit at this one with a good downside target there. So again, we're just looking for potential structures to trade. Again, extended flags here, not such a strong strategy because of this big sell-off. So I'm more inclined to wait for that same structure that we're looking at in financials, something more confirmative of further downside and longer term downside. So this was an extended flag play. And like we know, or as members know, this extended flag play strategy, very effective if it does work out well. But at the same time, it doesn't give you that strong confirmation that we look for continuation to the downside. So that's kind of why we use a lower risk on those trades. and why we would have only risked 1% of our capital here. So it is just part of the game, and we wait for further confirmation down the line of that bigger move to the downside. AT&T starting to look like it's topped out, but also a little bit of a dangerous region because there's obviously a possibility for another bounce. Well, actually here we go pre-market. We've bounced pre-market all the way up to our 1-to-1 region. So we're waiting to see a kind of that same structure, impulse, correction, impulse to the downside. So good short in terms of the structure. It's a really clean corrective structure, nice ABC running flat. But in terms of downside, you just need to be patient and wait for confirmation of downside. Visa, a little bit confusing in terms of the structure because of all the possibilities that we have within this. More in kind of looking at this in terms of the MasterCard blueprint that we have, where we're going to see downside towards 185. And this is all just a central structure where that is just a central B wave running flat. And then we're going to see a sell-off as an ABC. But I still like the kind of long Visa, short MasterCard strategy because of the potential structures, the potential upside we have in Visa versus what we've seen in MasterCard, where MasterCard has had that big sell-off to the downside. It has paid us dividends to have that strategy, and we can still potentially make good money because when we get down to this 320 region in MasterCard, we're going to flip that short into a long, and that could kind of supplement the losses we took in Visa, holding that Visa long. So strategy-wise, I still like the move. Still going to hold on to that, but obviously there's potential downside that we need to hold in the Visa trade moving forward. Exxon Mobil still has good downside moves here, some good downside potential. Kind of tempted to look at all of this as a little bit of a lower degree running flat, but I'd much rather wait for something way more indicative of downside. So again, we've had that impulse. Now we just wait for a corrective structure to get into that short. Still kind of have that short-term bias on Exxon Mobil, despite this big strong rally that did break the highs. But because of the structure of the rally, I don't see how this is a corrective structure for further upside, or for this to be a B wave to the upside, which will give us a C wave and then extended move to the upside down the line. I think this is more of a wave failure or a kind of final wave to the upside, and now we're looking for extended downside, especially when you look at the higher time frame structure, which does have that ABC look to it to the downside. You can see here ABC to the downside. I would have preferred a much more complex B wave, but there's obviously the possibility that this just rallies to the downside and then gives us a short, sharp rally. And then actually what you're looking at there is just an A, B, C, D, E expanding triangle. So again, bearish views remain in Exxon Mobil. PayPal continuing to look weak, still selling off, and actually has a bit of a corrective structure that's formed here in terms of potential downside. So I'll be watching this as a potential entry or additional entry for shorts. Same with Tesla. Tesla's definitely heading towards the fear zone of that bubble structure. So if you guys go and research the what they call the bubble pattern, you have this parabolic move up, you have this big sell-off, you have what they call the bull trap to the upside, and then the last move to the downside becomes the fear zone. So this fear zone, when you break these lows, people start to lose faith in that bull rally, and a lot of stops are sitting underneath this section. A lot of people bought this little rally and have a stop loss below these lows. So once you get into this region, you start to trigger those stops and you start to see an acceleration to the downside. So this is playing out as a textbook short. So we're watching that for potential area. But as you guys know, being short from this 715 region has been on the cards for us. A little lower time frame head and shoulders with the retest has played out really well. So you should be in this already. And you should see bigger returns down the line. So as you can see, in terms of our general outlook on the markets, we remain full-blown bears at the moment. Not one long setup that I have here, apart from a short-term long in Johnson & Johnson and a potential long down the line in a couple of days in Pfizer. So pharmaceuticals are really the only ones that I'm interested in any decent longs, and the rest of them, we're really looking at a bearish market in my view. So we'll be watching this sell-off with very, very clear eyes and looking to take advantage of a continued sell-off in the US markets. Cool, guys. Members, we'll see you in the members area to catch up on a couple of things and to really narrow down some really key trade opportunities that we have on the cards. And non-members, thanks for watching. Check out senecalytics.com for your membership opportunities there. If not, you can find me on Twitter at Senecalytics, or you can get hold of me at the contact us at Senecalytics section, and we can chat about what it is you require in terms of your membership and what you want to do with your trading. So we can just chat about your education in the trading space there. So yeah, feel free to contact me. It's cool, guys. Hope you have a good one. Have a great week. Stay patient. Look for those shorts.